Hello, everybody. Welcome again. Another edition, 18 Minutes with 180 Markets. Friends, we all know Australia, when it comes to commodities, is world-class. One of the greatest commodities here, obviously, is iron ore, tipping up today about 2%, $126, $128 a ton. I also don't know if you guys have seen, but demand out of China last month, absolutely ravenous. And I think in some ways it's obviously reflective in the price, but even more important is that supply-demand equation. With us to talk about it is Joe Phillips of Macarthur Minerals, and he's going to talk all about his WA iron ore projects, but also he's going to weave in, very importantly, some macroeconomic conditions that we may not be familiar with and how each cycle is a little bit different. Anyway, with that introduction, Joe, welcome to 18 Minutes with 180 Markets.
Thanks, Greg. Pleasure to be here.
Joe, everybody's got a story, but in your case, you have a very interesting story, and there's obviously a reason to your background as well. Just give us your story, please.
Yeah, look, a 2-minute. My family were what they classified as gougers. So we were small-scale artesian copper miners from a place in Australia called Mount Isa. And we pioneered in that area, in situ, and also bulk leaching of copper product. So we're Australia's smallest producers of copper. So from the age of 5, my role in the family was to sit on the ore dumps once they came up from underground and take the green rock and put it in the back of the truck. So that was my early days in mining. Went underground at a very young age. Been involved in all aspects of mining. So not only shaft and tunnel but open pit. But also been involved in the trucking and transport business. But the interesting thing is I got to a point of my life where I thought to myself, there's got to be an easier way to make a living than spending your life in the outback, which I still do enjoy, but there's got to be an easier way. So I spent some time at Princeton Uni, which we've been talking about. I worked over there as a project manager in the 80s, came back to Australia, and I joined the Australian Labor Party through their government organisations at a state and local level. So I spent 16 years in there, did major asset privatisation for the government. One of the lotteries here, a bit like the Tattersalls, are well known in Melbourne. I actually sold the Queensland lottery to Tattersalls back in 2007 for just under $1 billion. So I have a wide background. I took Macarthur on in 2009. I bought the largest shareholder out, Ken Talbot. And at that point in time, we had a small resource in iron ore. I thought it could be much larger and had a greater potential than what was being delivered by the company itself. So I ensconced myself as project manager, which I'm good at, on the ground, in the bush, and basically repeated my early days of driving a project through. Since that time, we've delivered a resource in excess of 1 billion tonnes, and we've also got a hematite resource. And we've been through the EPA for our hematite. We've got approvals for extraction for our hematite. We've got granted mining leases and tenure. So look, I won't get onto the project, but that's a bit of an insight into my background. I very, very hands-on. Very much driven towards creating an environment where people can be their very best, and that always will reflect in value.
Absolutely, and I'd love to come back to that if we have time, because it really is incredibly interesting. But we do try to keep these brief. Can you just talk about your projects a little bit and where do we stand at the moment? Because I think our audience is maybe not as familiar with Macarthur as it should be.
Yeah, look, thanks very much. We've been listed in North American markets now since 2004. We listed in Australia in December last year at a issue price of 25 cents. So if you got in on the listing in Australia, you've done very well. Thanks very much. We continue to add value to the project, but there's 4 things I want to touch on. The first is property. Title is vital. We have granted mining leases, which means we've cleared native title and heritage. We've done an enormous amount of drilling. I mean, 250,000 metres of drilling, as well as extensive metallurgical test work on the iron ore. That's point number one. So we own the properties, we have no debt or royalty structure over the properties, and we're now moving ahead for the development of those. The next point that I'll make, which is point number two, is it's great to have a box commodity, a resource, but you've got to get it to the world market. So we've been working very diligently now with the above and below rail providers, and we've got a rail network that's about 80 kilometres, 80 to 85 kilometres off our southern border. We've been working with those to get access to that rail network. And we did announce to the market some months ago now that we finally got the ability to put our train sets on that network. The next is to get it through the port, and we're negotiating now with the Southern Ports Corporation of West Australia to allow us to move our commodity through that port. The next component for that, point three, is offtake. And in March 2019, investors would have seen that we did a global offtake with Glencore Mining. Glencore is a very, very large mining house. Globally, it's one of the largest iron ore traders in the world. It's been to our properties many, many times. It knew Macarthur well. And March last year, they said, well, we want to be part of that. Now, Glencore owns about 4 or 5% of the company now. So, they've got the ability to take our product and sell it to the world, which is part of their expertise. So that's the fourth part of the still. And the final point that I'll talk about is in relation to capability. I'm a big believer in building the right team. And you'll see we've brought on board Andrew Bruton. Andrew is an ex-legal provider. He was one of the senior partners for a national Australian law firm, principally responsible for mining and infrastructure. So he's directly negotiated with key port providers in Australia, access to their ports and access to rail networks as well as mining projects. Dr. Dean Carter's been with me for 8 years. He's ex-Mount Gibson. He's a very diligent, hardworking and clever man with the ability to bring projects out of the ground. And the final point, who's just a new recruit, is we've appointed a gentleman called Mr. Richard Moon. Now, I've known Richard for over a decade. He was the Australian head for Hyundai. Last year, Richard tapped me on the shoulder. He bought me dinner and he bought me a book about his chairman from Hyundai. And he said, "You need to read this, Jay." And I did read it, and it was an amazing story. And then I said to Richard, "Have you ever thought about doing anything apart from being involved with Hyundai?" And he said, "No," but he now works for us. So I've got Richard ensconced in Seoul. We have a little office there, and his role is to find us strategic partners. So, that's a critical thing. But look, it's about building the right team. It's about having the right owners team to deliver not only the study outcomes, which we're in the midst of now, our feasibility study, but also having an owners team that can actually manage the EPCM or EPC contracts that we need to bring this project out of the ground to release its value. What's it look like? Simple metrics. In Australia, we can deliver it to the port for shy on $55 Australian per tonne. We've got a big resource. We're only targeting 3.4 million tonnes per year to start with. And we've got an implied payback period of our capital of 2.5 years. So, look, we've got some research that's just been brought out by an independent company called Breakaway Research. And if you go to their website, invariably you can see that research, which our friend, he's done his own analysis. He's put that together as a research paper, and for good or for bad. We're also published by Morningstar in North America, as well as a range of other sources. So if you look hard enough, you'll certainly see some other people's views on Macarthur and its potentiality. Sorry, Greg, I'll pass back to you.
Yeah, absolutely. So I mean, those financial metrics, $55 a ton, 2.5 year payback are certainly, very, very impressive. Can you just tell us, where do you stand as far as, so everyone's totally clear, resource reserves, and when would ideally you come into production?
Yep, we're looking at a production of the major project. We have some opportunities for small scale, but we're looking at the production of the major project probably in the first quarter 2024. And that's probably an interesting soiree into the dynamics of the market. Now, 96% of the Australian iron ore industry is dominated by the majors, BHP, Rio, Fortescue, Roy Hills, and some dogs and cats. The 96% of that product is hematite. Now that's direct shipping ore. You dig it out of the ground, you put it through a crusher and a screen, and you put it in a truck and you send it to China. And that feeds blast furnace technology. And I did mention I was going to talk about the macro supply demand. An interesting one that I stumbled across the other day is if you look at the annualized run rates that left Australia in the last quarter on seaboard iron ore trade, you'll see that if you extrapolate that, now I know this is fictitious, it means that in China they've increased their demand of material by 30% year on year. Now that's unprecedented. I can't explain that. I'm just assuming that they're stockpiling. Maybe that might be the answer. To stockpile materials. But again, that's counter-cyclical, because why do you stockpile materials at a time when the iron ore price is high? Theoretically, you'd stockpile when the iron ore price was low. But anyway, so there's a couple of dynamics that aren't easily explained. The other point that I'd like to make out is that the other point that I'd like to focus on is that for the first time in the last month, India has been the major supplier of finished steel products to China. Now that's anomaly. That's popped its head up in the last. It's increased its supply by 109%. So I think that's an interesting one.
Yeah, it would be, and I suppose, I don't know where Brazil fits into the mix, if you will, but obviously, if you look at the numbers coming out of China, the demand is just huge.
Yep, you're right, and I'll give you the Brazil figures. Brazil's down. It's got a plate rate of about 355 million tonnes per annum because of COVID and other issues it's been having with its settlement dams and things. It's down to a run rate forecast this year around about to 300 million tonnes. But let me just talk about Vale.
Yeah,
Vale is an interesting company. It talks about the new green iron ore. And it's something that I've been sort of talking obliquely about now for some years, because magnetite is different to hematite and it has different applications. Now, hematite, as I said, you dig it up, you put it on a thing, goes to a blast furnace. Technology is changing. The emergence of the electric arc furnace, the use of scrap metal, doesn't allow needs to have a feedstock of magnetite pellet. You cannot use hematitic ores. It's got to have a high grade, a magnetite pellet. Now, arc furnaces are more efficient, less polluting, and also they have the ability that you can turn them on and turn them off according to supply demand dynamics in the industry, whereas blast furnaces need to operate continuously. So, in places like the USA, a majority of all steel produced is blast furnace. In places like Europe, a majority of all the steel produced is in blast furnaces. So you're seeing a change not only at the demand end, but you're also seeing a technological driven change in relation to what the customers want and demand. Now, the other thing is magnetite's exothermic, which means it contains extra oxygen molecule, and so therefore it creates some of its own heat, which reduces the need for coking coal. It drops the CO2 emissions down quite substantially to blast furnace technologies, and it also has other properties in relation to more advanced steel manufacturing. It's more malleable, which means that you can stretch the steel and you can bend the steel and you can mold the steel. So in advanced manufacturing and auto, it's the product of the future.
And how does that fit in from Macarthur?
Well, I got 1 billion tons of it. So we have a generational supply. So, one of the key roles for Richard Moon in Korea is to find a steel or an auto manufacturer or one in Japan or Taiwan that actually wants a generational supply. It's a terrible analogy, but it's a bit like a cigarette smoker. And thank God I don't do that. But a cigarette smoker smokes one brand.
Right.
And they stick with that, religiously. In iron ore, they want to get a constant supply of the same product, and they optimize their furnaces in accordance with that blend. So there's no surprises in the brittleness of the steel or the quality of the steel that comes out the other end. So having a generational supply, which what Macarthur can offer, really puts us in a good position there. And having Glencore beside us in relation to the marketing of that and distribution of that, and having access to an existing rail network in a first world country, and having access to a straight-owned port, which we're negotiating now. I mean, it's got a lot of, Macarthur's got a lot of the right ingredients.
Yeah, no, and that's what I was going to say is that, having, so, you alluded to people earlier, and obviously you're a people person. Having Glencore as a partner and as a, frankly, an equity partner, um, is that part of your strategic plan that, like, look, they can help you in a lot more than just going out there and buying a few shares in your stock?
Yeah, look, 100%. We have monthly hookups with Glencore,
Right,
and if I have a problem, I ask them a question.
right,
When we talk about arc furnaces or blast furnaces or product quality, product spec, I might say I'm grinding it down to this size and I'm taking these impurities out. Does that increase its marketability or not? Let me go back to the study process. You know, Generally when you do a feasibility study, you do your geology, you've got your engineering, you've got your metallurgy, and then you have value and use studies that you do in relation to the value of your product to steel manufacturers. And then you've got another piece there, which is your funding strategy. But I'm trying to draw all of those elements in together. I'm trying to bring the resource through, the metallurgy through, the engineering through, but at the same token, the fact that we've got Glencore in there, who's actually working with us on the end use product look, that's really important because we want to produce a product that they have a solid market for. And that helps us. So we're doing that now, helps in relation to the identification of strategic partners.
absolutely. And, what would you say? Obviously, we can, certainly understand the generational aspect of Macarthur. What would you expect us to look out for over, say, like the next 6 to 12 months like, what would be success in your mind?
Yeah, look, 100%. I mean, I said at the start of the year, we did a few interviews and I said three things. First is our resource statement will come out, which puts us in a category that's above an indicated or inferred. I said the second thing is our route to market, and we'll secure our route to market this year. And the third thing for us is getting port access. The port access is critical. We have been doing all the right things. There is capacity at the Esperance port, but the issue is there's a saying in Australia: no one ever got in trouble buying IBM. When you're dealing with government organisations, they really do take a conservative view on their customers. And
Right,
because we never had a balance sheet, and because we've never had the wherewithal, we're not a BHP or a Rio.
right,
If BHP and Rio walked in the door and said we want capacity through the Esperance port, they wouldn't get out the door without a letter. For little Macarthur, it's been more of a gradual getting to know you program, and
right.
and look, that's coming together very well. It's coming together very, very well. So I think before the end of the year we'll have port. Then it's about a feasibility completion, which is in the first part of next year.
Right.
We'll also talk about strategics and funding. Working with an office in both Korea, but we're also got a strategic partner finance partner in New York.
Right.
Eddie Sugar, who was involved with the early day financing of Rescue. He's working on making sure that the components of Macarthur can fit a publicly offered bond issue. So, we're looking at bonds as opposed to equity, and that's coming together very well. So, one of the aspects of, I suppose, my management style is I don't like to leave everything to the end. I like
Right.
to work on components because you can learn how you can optimize your pro by looking at the end product user, the end product, the financing strategy, and strategic partners, who can get itself. Look, where Macarthur's well and truly ahead of any other competitor and any other producer in our area. We've invested over $120 million in the project to date, and we want to see it come through for value for our shareholders by 23, 24.
Fantastic. Joe, thank you so much for your time. I really appreciate it. And also, I really appreciate you bringing Macarthur to the Australian audience, because certainly the company is deserving of a lot more attention than it's currently getting.
Thank you, Greg. Thanks for your
Appreciate it.
time.
Be well. Bye-bye.
Thank you.